Bonds, they do tend to be what we would call a defensive asset class. In terms of risk, they're somewhere in between the low risk of cash and the higher risk of shares in property. So they're somewhere in between, but we tend to lump them together with cash in defensive investment asset classes. It is really important to note, though, that bonds aren't just a direct replacement for cash. So they might sound very conservative and defensive, and we do sort of frame them that way usually, but they can go up and down in value similarly to how stocks do, because they can be bought and sold on the market, which means they can go up and down in value. Usually that's in relation to interest rate movements. So when interest rates rise, the value of bonds tend to fall and vice versa.
And there are different risk levels with them as well. Like not all bonds are equal. It depends where the bond is actually coming from and where you're borrowing money from. Like I've had people use the example of you can borrow from the US government, you'll hopefully get that back. But if you're borrowing from a random startup company, probably not.
That's right. So just like how you have a credit rating as an individual, different companies and different governments have different credit ratings as well.